Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Tuesday and another interesting day. Lots of volatility, lots of action both ways, and wound up, rewarding some and hurting some. Like I guess just another day in the life. The real question is, are we closer to some type of tradable rally? Did we successfully get close enough to the S&P lows? And at this point, it remains to be seen. All I know is that the tactics that have been working for me and for some on the VTF is, the H cell setup, to short, which means you're shorting a bounce, and then you're adding when it trades through a prior low, as well as the RDR, which is already trading through a prior low, makes a new low, comes back above it, and you tactically take that long, sell some strength, and then trail some, and then if it doesn't work out, you get out of the rest of it just in case it doesn't build. So some guys in Twitter everywhere around has been asking me, can you show one or two of these, because not everyone knows what the H cell setup is. It's a tactic we use at T3, or even the red dog reversal, which is the RDR, which is a way to trade around pivots, where there's usually an inflection point where there's a battle between longs and shorts, which creates a trade if you're on the right side of it. And it's also a way to give you a trade with a plan versus just trying to catch a falling knife, which could put you out of business, or shorter rally that keeps going, that makes you cover and squeezes you out before finally you're right, is when the rollover does happen. So anyway, let's take a quick look at the chart of the SPX. So again, this was your channel. This was your channel that went on for 7 months before finally getting very tight in here and breaking to the downside right below this 2040, 2070. Lost all the moving averages, broke below the 200-day moving average, engulfed this entire channel. That gave most the signal to be out of your risk, especially if you're an active intermediate trader, and even the signal to get short. And if you did so, you could have made money this day into Friday, and then who knows, you might have even been short on that flash crash low, And since then, a few different ways to navigate. This was your first wedge that wound up resolving before the Fed met, to the upside. Then you had your topping tail after they said they're not going to lift rates. Okay, then you had your breakdown below this 1960, which could have got you short. Now we're on the downside of this apex, upside of the apex, downside of the apex, and now here we are within a pebble throw away from this this August 24th lows. So does it hold, and do we bounce back up and test 1921 or higher? Or we flush out below it, get everyone really short and come back above it, or close below it and head to even lower areas, which you have to pretty much go to your weekly chart, to figure that out. You look at the weekly chart, which we've shown many times also, and you talk trends, and the first trend, from 2011, that got broken here, okay, within that micro pattern I just showed you, changed, and now we're in the midst of testing, this spot. That was your October low, and here is the existing low. So the question is, does this trend, hold, or do we go back and retest really, the low from 2009, which comes in a little bit lower, which still is intact. So you have your intermediate trend that was broken, okay, where the trade changed, but you still have this macro trend still intact, well below it into this little zone. So at this point, we're figuring out if this is a normal correction, or does it, really, trade down to maybe even retest this 1570 area at some point, but that's a long way off. Right now we're trying to tactically trade this thing, and let's get back to where we were today. So where we are today is right here, where you have this little move where, remember, the V now turned into the W. Now does this W come back up, or do we get an undercut, which the undercut would take you down to here, which would probably stop a lot of people out. So we'll see what the market wants to do. So, that's more of a bigger picture, but then you go and you want to look at how to make money today. My first move actually, when you come in, just say you go to the spiders and you try to figure out what to do, you had two moves, okay? First move was it opened up and sold down, okay? It sold down and traded below this low here, traded low below this 187.64, which was your pivot, okay? And it hit that whatever that was early on, which was 186. It was, what was it? Actually, it wasn't that low. But anyway, I'll get into the 5-minute on that. But what happens is if people have stops here, you trade below it, you get stopped out. If people are like, oh, we're going to trade below this, and now we're going to test this, they try and get short. Once you get back above it, it gives you that tradable move. So you go to your 5-minute charts, you can see how you could have played that tactically because there was a nice trade there. So here it was, okay? So basically, this was the move through yesterday's low. It was quick. Boom. Got some people out, got some people short. So on this first move back up, I was a buyer, okay, through the prior low, which was at whatever, 187.64. Then it gave you enough of a push that you're like, oh wow, look at this 2-bar push into some resistance. And then it did hold a bit higher. So if you take like a bigger look here, you will see that you had your push up, held higher, and then gave you another move. And within this move, I was selling into this move, and then you want to trail it. So the way you trail it to see potentially if there's more, because sometimes there's more, sometimes there's not, really is you draw a trend line. Okay, the trend line from the low was pretty much in here, and then I think my stop was once it traded back below this little area. I was like, if this is going to stay and continue to step up, it probably doesn't break this area. Some people would have used this line, but I think I used right around here, which was, almost 70, 80 cents off the highs. And that was your first move. And within this move, you could have made a nice amount of money. I think I tweeted right around here saying, if you bought the Red Dog reversal at 187.60, selling above, 189, you're making $1.50 or so. Take some off and then, perhaps trim and trail. Okay, and then if you were trimming and trailing, that could have been your out, or you could have said, I'm going to give it all the way back down to the lows for my last tier, or not. Some guys might have said, I'm going to do the H sell setup, right? What's an H sell setup? That's what some people say. Okay, well, you do like kind of the letter H. So you go like this. Okay, you draw your pole of that. In my morning note, I talked about how, real resistance probably comes in closer to 190.56, which was the pivot from the prior day. So some people would have waited for the bounce and said, I'm going to short into some resistance. So you sell short into resistance, which is whatever that was in 189.75. Say, I'll give it to 190.50, which is last week's pivot. So you're basically creating this H, okay? And you're not just shorting a low, you're actually shorting strength, so you get a better average cost. And then your add would be, if it trades through the low of the day. And it took some time. And then basically, if just the reason why the H sell setup is good, because you get good prices here. Maybe some people said, I'm going to short here versus that. Because if you shorted right there at the lows, there really wasn't that much money to be made. And you popped right back up in there. So sometimes you don't get a short low and cover a lot lower. You have to sell some strength in order to get good prices and work into them, so when it breaks the low, you could add some and scalp some and not be in jeopardy of just buying, shorting here and not making any money. So that's one example. Okay, another example where there was a two-way trade, the other vehicle I went with was Facebook. Facebook had 2 big down days. They give you a sell signal on Friday. First tactical move for the Facebook for me was, look for a Red Dog reversal, trade below the prior day's low, stop some people out, come back above it, buy it, and then get a move to positive and push, and then take the trade. So if you go to Facebook, that's what transpired here in the beginning of the trade. So you go to, right here. Okay, again, what's the low of the day? The low of yesterday was right here. So it broke below the low, which was 88.18. That was the pivot from my morning note. Broke below, came back above, and that was your buy. So I bought some there, came in, I gave you a push. You could have sold some, and then I actually even, bought a little bit in here, and then sold some strength. And then what did I say there? I'm going to trail some. So you draw your little, your little trend from the morning low. Then it looks even a little bit more apparent. Okay, where here is that trend. So if you bought some when it came back above the prior day's low, you had a quick push, made some good money, and then as you saw it held higher, the top third of this little range, you got another viable push above this into resistance. And then if you sold some strength, you could have gotten out right here, right when this little spot broke. So that was one side of the trade, if you were looking for a tactical long on day 3 down. The other side of the trade is, okay, Facebook's still expensive. I'm looking for the H sell setup. I'm going to wait for some type of bounce because I don't want to press, lower at first and short some strength. So first of all, let's go back to, the daily chart to show you what you could have seen in Facebook, here. Remember I talked about that sell signal? Look, that wide range bar. We talked about it yesterday in the morning call, the Morning Express on Monday. And pow, that was your sell signal. Some guys got pretty short here, okay, when it broke below there. Then you got your second day down. So then today, what did you know? You knew that this is your prior low, that 88 whatever it was. And at first it gave you a tradable long and then a short. So, to see the H sell setup, you could have went again to the 5-minute. Said, okay, let's take a look at the last prior few days. Okay, so resistance came in, pretty much where this would have been your resistance area. I'm not sure where I listed resistance on Facebook today, but here's your pole, almost like a bear flag again. You move lower. So broke a little bit below. If you said, I'm going to wait and short a bounce, and you shorted somewhere around here, you could have got some good prices. And then here, you had great prices. This is your tier 1. And this time, okay, not like the spiders, when it broke below the morning low, you could have added to it, and then you had another $1 or so to the downside. So you could have shorted it into the 89. You could have even waited to short here versus that. And then, what did it do? It created a lowercase h looking, right? Here's your pole, come back up, make a lowercase h, starts to roll over, and then you're pressing through the morning low because people are getting stopped out. That could have been, it could have been your first trade if you didn't do it here, if you don't like doing that. But if you had that, you had much better prices. And then boom, you shorted through here and you got paid before this little bounce back. So I took the red dog reversal to the long side because look how fast and furious that was, especially since I didn't get caught in this mess. I sold it on Friday, somewhere around there. And, I did not take the other end of it. Okay, what I did do is in Apple, in the morning call, I talked about how if we break below 112.40, there's a void down to 110, and that would help push the market lower and, maybe get us closer to retest those lows. First move of the day, it was a little stronger. It held in there. But then when the spiders made highs, Apple didn't participate. So that's what got me looking at it for a short, for a tactical short. You go to Apple, what I'll show you on the main chart, you go to the daily. The reason why I was saying there's an air pocket there because, you have this trend right here and basically broke when it broke below this support. When it breaks below support, you get out of the way. And this was at 113.64. I actually did it a little sooner. I think the low that I had was, what was this yesterday? 112.44. That was it, 112.44 right there. And then pow. Okay, so I'll show you the divergence you could have seen to give you some confidence to be short. So this was the first break, and then I was like, there's an air pocket to 110, and obviously it went a little bit below that. The air pocket was right there because between here and here, not much support. So that's why it was a good trade. And now we'll figure out what's next. I think the next real support here comes in at closer to 105 as this ascending channel is now broken to the downside. But let me just show you the divergence that could have helped you get out of the way. Okay, and that was right here. You go to your 5-minute chart. 5-minute chart in Apple, okay, where, let's see if, here's your 5-minute chart in Apple. Where are you, 5-minute chart? Here's the 29, okay. Okay, here you go. Little H setup too here, to be honest. Move lower, little H. Okay, so here was your first move. Carl Icahn said that that Apple's the best. It's not going to go down, et cetera, et cetera. Here was the support, that 112.44 that I said it was important. So right here you had your move to the highs. The high of the day for Apple in the morning was, look at the time, 10:30. This was 10:30. Okay, 10:30 was the high of Apple. Go to your spiders. Spiders, you come here. The high of the spiders was 10:30. And then here it made a lower high. Okay, the lower high in the spiders at 11 o'clock, a half an hour later, was right there. Let's see where Apple was at 11 o'clock. Apple at 11 o'clock, here's your high. Apple at 11 o'clock was, a much lower high. Okay, not too much of a divergence there, so the jury was out. But then right here is when it broke that 112.44, okay, and that's when I got short and I covered into this move lower. Okay, I was actually at the gym and I put some orders in, I covered and I missed this whole move lower. But it didn't matter, this was your spot. And the thought process was, if they could take Apple, lower and break this ascending channel, they could, get the move in the market fueled to the downside. And they weren't able to get that much downside, this morning or in the afternoon when Apple started to fail. But now we'll see what's next. Tomorrow you have this pivot, which is, today's low. So if you follow me on Twitter, just so you could know my rationale, I tell it's my Redler all access all the time. Just say the futures are up 5 handles, okay, and Apple's up 20 cents. I'll say Apple, dragged the market down yesterday. It put a pivot low in 107.86. It's up 30 cents. I would look at the 5-minute chart, okay, and if you're looking to re-short Apple, if the sellers want to keep some pressure on, it probably doesn't get back above this, 110. So it closed here around 109 and change. It's up a little bit. I would say, test a little short here, and if they push the envelope, perhaps it can get it up to 111. So this would be your H sell setup. Okay, here's your pole, here's your low. So tomorrow, if the futures are up, maybe you short into this, and that would create your H, short some strength, and then if all of a sudden it starts to fade and fail, then you can get to short below today's low tomorrow to then perhaps get that move towards, this bigger support, which comes in closer to 105. You do have a small spot right here also, which is like 107 or so. So that's my thought process. Or, futures are down 10, 15 handles tomorrow. Apple's off a little, down a little bit, I would say. Apple, is trading, at 108.25. The low of the day is 107.86. Perhaps you could press it below the low, and then see if it can come back up and reclaim it for a red dog reversal. So that's my thought process there and on how to navigate it from a day-to-day area. But for now, some of the momentum was lost, and when it couldn't go up and make new highs and get going, when Icon was like, this is the best thing out there, the market's vulnerable, but this is the next best thing since sliced bread, it showed its face that it was short. And then you had the level there. So that was that. So if you could see by the few things that I showed you between the spiders of Facebook and Apple, there are ways to make money short and long it, based on whether you use the red dog reversal tactic or the H sell setup. So if we take a look just more of the macro landscape, you look at the bios, it should be interesting tomorrow to see what happens. I actually, bought the bios today. That's what made me some money too. Okay, it had a nice bounce back, but then, on the bounce back, people were like, where's resistance? And it was like 304.50, which was Friday's low, came up there and fell. So now you have an inside day. So it'll be interesting to see if it's inside and breaks this, which would cause a lot of selling, or inside and break above this to get you more of a retracement towards this. So we'll see what happens tomorrow based on the futures and based where it is. If we have a big down open, who knows? Maybe we'll be below this, and I'll say IBBs are opening below this 285, 284 pivot. See if it stays below to accelerate below it, or or it gets it reclaimed and takes some pressure off, or if we gapped up tomorrow, who knows what we're going to do. Say IBBs after holding this 285 and showing a little relative strength yesterday is up. See if it could hold it, and the market would probably get some upside traction if it takes out this 304 pivot to give you a little bit more of a boost towards 316. Again, that's tactically how I would be thinking, trading around these ranges until you could be in something for more than a day and a half, or hopefully more than 10 minutes. Today you had to be in things for 20-minute moves. Even if you were short at the end of the day, you had to make a decision when that little buy program came in to close things by the VWAP. The VWAP's been very important lately because institutions like to be at their VWAP so they know they're at least getting the best price for the day. Talked about a week before September 17th, that how the big buying on that August 24th low or in that time period was all corporate buybacks. But with the end of the month and the quarter and earnings coming around, companies can't buy their stock back. So be careful. And that was September 17th. September 17th was the last update that gave you the topping tail right here. So they did a cute squeeze into resistance, got everyone out right here, and this was the last day the majority of companies could do a buyback. So besides the topping tail that technically showed you there's a sell setup, you had that little spot, plus knowing that there's no more buybacks to, seasonality is going to play a role, get out of the way. And now we'll see what happens here tomorrow. So to wrap it up, I am flat overnight. I would have rather a close in the low, so maybe we could have a crazy open tomorrow to make a buyable move around either the August 24th low or last October in 2014 there was another low, so it's a zone. But we closed off the lows, and we'll see if they want to do something cute for the end of the quarter tomorrow, and then new money comes in the day after. So we shall see. I don't think there was enough evidence to tell you could be in a lot of longs and a lot of risk for that type of trade. I think the risk of things being down are just too big. But with all those tactics, you don't have to be in things overnight if it's not the most compelling setup. We are oversold. I think we hit minus 46 on the oscillator, so tough to be short overnight, but we're not super extreme where you can get bailed out of anything if we had a big down open. So I think a lot of people in the chat have been taking their trades, singles and doubles, two-way action. I've been actually making some money short. Believe it or not, Red Dog knows how to short. The reason why I was a typical long, since you've been following me on Twitter, because I only went on Twitter 3 years ago, and we've been in a friggin' strong uptrend since those 2009 lows. So I've been trying to be long versus short. So when you're in a corrective phase, you try and do both. And we'll see where we open tomorrow, and we'll see what we could do to navigate the trends and see if something changes. And as of right now, it really hasn't. We need more clarity, and it's still September. I think yesterday was like the 2-week anniversary of the 1987 crash, which is in October, so you're still going to get more volatility. If we happen to open up big tomorrow, I don't know if that was it, and you're not going to miss everything. So, take your anxiety down and just keep trading the action, because there's been, some decent things to navigate using the right process with discipline and with thinking clearly. I'll see you tomorrow. Have a good night.